Hi, welcome to Feedback 2. Going to go through question 3, 4, hopefully question number 5 from really quick. Where would these following documents have been found? Imran's sales invoice, book of prime entry would be the sales journal. Credit note would be in the sales returns journal. And for Imran, the central account would definitely not be in any of the books of prime entry. It's possible if they've got any interest that it may be for the customer a source document, but it's definitely not going to be for Imran because it's a record of all the transactions that they've already put into the customer's account in the ledger. Okay, for this question here, we've got trade discounts involved. Because you've got trade discounts affecting purchases, it will also affect the return goods. So just have a quick look at the answer. You've got balance brought forward of 200 on the debit side because Hannah owes the money to Imran. Sales recorded after the 20% discount. So 20% of, I think it's 320 is 64. So 256 is the actual amount of the sale. Similarly with the return, you do 80, take away 20%, which is 16. So the actual value of the return should be $64. And then there was a 2% cash discount on this 200. That does get recorded. We record the cash discounts in the actual accounts. So 2% of 200 is $4 for the discount allowed, and the amount of check would have been $196. Don't forget to do the opening and closing balances. You'd have lost a mark if you didn't do the closing balance. If you got it wrong, you still got a mark there. So don't forget to get these easy marks in an exam. And you can have a quick look there at the trade discount and cash discount, what you needed for all 4 marks. Bulk buying regular customers, prompt payment, and you've got to get in the term before the due date to get the full marks of the cash discount. Okay, next one's going to be difficult for you to see, but you can zoom in. Petty cash period, generally this was well done down to this point, so most people correctly worked out there was a balance brought forward of 56, the impress was 200, and therefore they've got to add $144 on the debit side. Most people then stamps and stationery, put in the credit entry and correctly put it into the analysis columns. The refund for personal postage, again, that's well done. Most people realise that was money coming back in. And then we've got 3 more entries that should have been recorded in both the credit column and the analysis column. A lot of people then did start to make mistakes. So the first thing that we needed to have done was to total the credit column and also to put a total in for each of the analysis columns. And you're told on this occasion that the balance was going to be made up at the start of the following month. So the balance carry forward will be the difference between the total of the debit side and the total of the credit columns added up so far. So on the debit side, it's actually 203. So you should have left a gap, put 203 as the balance and total on the credit side, worked out there's a $45 balance carried forward, balance brought forward, and then made the balance up on the debit side from bank stroke cash. What do we do with the amounts on the credit side? Well, the 34 and 16, unlike the other columns in the analysis column where we use the totals, these are individual customer accounts or supplier accounts that are going to be affected. So the debit entry for those will actually go in the individual accounts for Shakil and Arshad. And then we'd credit the postage and stationery account for the money that we received in for personal postage and stationery, because that doesn't belong in the business expense. So we need to reduce the expense of postage and stationery because we never actually sold that. And working capital, most people got that right. It's money available for day-to-day running of the business or for paying off any current liabilities. It's a difference between current assets and current liabilities. So that was well done. Return damaged goods to Annie, a credit supplier. That will have no effect on the working capital. And the reason why is that it will reduce both the inventory and the amount of money that is owed to Annie, who is a trade payable, and therefore the overall balance will be no effect. This one, it's a little bit tricky. The key word in here is it's a short-term loan. If it's a short-term loan, it's a current liability. So the actual repayment of the short-term loan will have no effect because you will decrease the amount of money as either cash or bank by $2,000 and also reduce the current liability of a short-term loan by $2,000. But because you've paid interest of $15, that will appear as an expense in the income statement, but it will decrease the amount of cash the business has by $15. And the final one, this was generally well done. Received a cheque for $190 from Uzma Ali, a credit customer, full payment of $200 owing. So that will reduce the trade receivables by $200, but it will only increase the bank by $190. And therefore there'll be a decrease in the current assets and therefore a decrease in the working capital of $200. Okay, question five. Question five, we've got 5 errors. Very quickly going through what you should have done with each of those errors. First one, purchase returns have been undercast by 100. So we need to credit purchase returns $100 and therefore there should have been a debit entry in the suspense account. Discounts received, 286 have been omitted from the trial balance. Discounts received a form of income, so we need to credit discounts received and debit the suspense account, 286. No entry has been made in the books. It's an error of omission for goods taken for Samira's own use. Debit drawings, 220, credit purchases, 220. So that one won't appear in the suspense account at all. And 159 received from Amrit Bhatti had been entered in the account as 195. Entered in his account as 195. So it should have debited bank 159, which is correct. But we've made too much of a credit entry by 36 in Amrit Bhatti's account. So we need to debit Amrit Bhatti's account 36, credit suspense 36. And then this one caused a lot of people trouble. Rent paid $200, credited in the rent received account. So to take the error out of the rent received account, we need to debit rent received, but rent paid is an expense, so we also need to debit rent paid $200. We've got 2 entries on the debit side, each for $200, and therefore in the suspense account we need to make an entry of $400. So if you look at it on here, the opening trial balance, shortage on the debit side, so the opening balance is debit 116 from the trial balance difference. We've got the purchase returns and the discount received that we discussed, both on the debit side. Amrit Bhatti got debited and therefore we credited the suspense account, and we've got the 2 rents which were on the wrong side, and therefore we actually still have a closing balance of $66, which means that we know for certain that we haven't found all the errors because there's still a balancing figure on the suspense account. That caught a lot of people out. And then the second one was to do with errors that don't affect the trial balance, and it did specifically ask you to then give an example. So what you should have done is either detected, in fact you could only really use error 3, all the others did affect the suspense account. Hope that helps. If you've got any questions, feel free to ask me, and I'll obviously be back to do questions 6 and 7.